afternoon, everyone, and welcome to Stock Market Today. You have Alyssa Corum and Ken Shreve here to break down what you need to know about the market action. We'll pull up an intraday chart as well. A little shocking to the eye what happened intraday, but when you put it all in context, not too bad. We'll talk about that. And Ken, give us a preview of a couple of stocks that we'll be taking a closer look at as well.
Okay, well, we'll take a look at software maker HubSpot, which bucked the trend today with a 5% gain. Also, take a look at Novocure, which continues to hold gains nicely after a recent bullish gap up in price. And finally, Marriott, discussed a little bit on IBD Live this morning as it forms a flat base.
Fantastic. First, a look at the major indexes. So we're going to start off here with a chart of the NASDAQ, which finished down about 0.9% for the day. But intraday losses as big as 1.5% or so, and sparked by news that the Biden administration is eyeing a hike to the capital gains tax, Ken. So investors getting a little spooked by that. The Dow and S&P also down about 0.9% today, and small caps, the Russell 2000 down about 0.4%. So just give us your take on what you saw in the market today.
Yeah, big wave of selling between 1 and 2 o'clock Eastern time. But I was talking to news editor Ed Carson, and he was a little surprised by the market's reaction because this was not unexpected from the Biden administration. So, but like you said, the market did get spooked, and this is an example of what a distribution day looks like. We did get significantly higher volume on the Nasdaq and the S&P 500, and sharp percentage decline. So we will add a distribution day to the S&P 500 count. That's 3 since April 14th, and just 2 for the Nasdaq. So certainly not enough to derail the uptrend here.
Right.
Semiconductor stocks very weak today, but you can look at the Nasdaq's chart here and see it's still holding support at its 21-day exponential moving average, which is important.
Exactly. And let's also take a look at QQQ, which tracks the NASDAQ 100. So underneath the surface, the big tech players, of course, taking hits, but still holding around the same trading range as the last couple of days of trade.
Yeah, I mean, this probably even looks a little better than the Nasdaq composite by a little bit. It's still holding comfortably above the 21-day moving average, and bottom line is both the Nasdaq composite and the Nasdaq 100 are still in position. If we can get some institutional buying coming into this market, we haven't seen it for quite some time, but if we can get big money stepping in from the sidelines, that could fuel a breakout for the Nasdaq composite over the 14,000 level. So that remains to be seen if it's going to happen. But again, as we talked about in IBD Live this morning, there's still a fairly large amount of decent looking charts out there, and not seeing sell signals left and right, which you typically do in the early stages of a meaningful market pullback.
And let's also take a quick look at a couple of ETFs tracking some of the other indexes. So the Dow here coming down to its 10-day line, again, with a decline of about 0.9%. And the S&P 500, same story, Ken, just coming down to that 10-day.
Yeah. I mean, they don't look like they're not in any significant danger here. But going forward, we'll see how the market responds tomorrow to what looks like a distribution day for the S&P 500 and Nasdaq. And one of these days, hopefully, we'll see a nice higher volume gain, a sign of accumulation. But right now, especially with the Dow and the S&P 500, they have been running higher for a while, outperforming the Nasdaq, and they just got to a level where pullbacks to the 10-day moving average for each look pretty mild at this point.
Most definitely. And the IWM, which tracks the Russell 2000, a downside reversal here right around the 50-day line, but still trying to hold that level. Now we want to take a look at some individual names. Starting things off with Tesla here, down about 3% for the day, reversing lower, but holding above that recently retaken 50-day line.
Yeah. So Tesla had a nice gap above the 50-day moving average. We're going to hear from Tesla very soon. In fact, Monday after the close, we'll hear from Tesla Q1 earnings report. And yeah, I think not sure the stock is out of the woods yet, but the fact that it's been
Mhm.
able to hold above its 50-day moving average for several days after that strong move above the line is positive. It still has some work to do to build the right side of this base, but still looking okay ahead of Monday's earnings report.
And then talk to us a little bit about maybe some aggressive entries that we've seen as of late for Tesla. As you mentioned, not out of the woods yet. And then, of course, with that earnings report right around the corner, that's going to need to be taken into consideration for those who made any recent buys.
Yeah, I mean, again, I'm sure there were people buying when it gapped above its 50-day moving average on April 13th, right there. But right now, clearly the high set 1 day later, right around 780, 781. Yeah, that we'll be looking to see if it can move above that high as well. And we'll see. I think technically the stock looks okay at best at this point. It's still far off
Mhm.
its high, and we'll see what the numbers look like on Monday.
Has some work to do, but all right, we'll put it on watch for a potential move on earnings. And Roblox was an IPO that we've been paying attention to a lot as of late. Staged a breakout over an IPO base buy point, but since then, Ken, that breakout has fizzled, round tripping its gains and then some, coming back down to an aggressive entry that we had, and today reversing lower. So give us your
Yeah.
thoughts.
Well, you know what? I gotta tell you, I have the three stocks I was going to talk about today are not the ones that are showing on the screen here. We had Novocure, HubSpot, and Marriott actually, but so
Well, thank you. Clearly, there's a production glitch. So
uh,
go ahead, Ken. Take it away.
uh,
Novocure.
Okay, so maybe yeah, let's pull up a chart of Novocure here because I just wanted to call out Novocure. That one is coming out with earnings last week, and you had a nice, and now we're having an issue. Okay, here's the chart. A really nice gap up for the stock recently. This was on a positive late stage trial for their TT Fields technology, a very innovative cancer treatment that uses basically electric fields tuned to specific frequencies that disrupt the division of cancer cells. And a lot of encouraging data here. It's only approved for glioblastoma, which is a form of brain cancer. But this trial showed very positive results for non-small cell lung cancer. It's also looking at indications for pancreatic cancer, ovarian cancer. So earnings due next week for Novocure, but very impressed how this stock has been able to hold gains after that bullish gap up in price.
Most definitely. And then we have HubSpot, HUBS, worthy of a closer look today, adding to its gains yesterday with another
Yes.
5.5% gain today. So it's nearing this handle buy point.
Yeah, pretty impressive on a sharp down session for the market here. You can see volume actually rose from Wednesday, below average, but higher than what we saw Wednesday. So that's a positive. This one's a breakout candidate. Now, stocks breaking out of bases have been having a generally a difficult time in recent weeks. But this one is setting up nicely back above the 500 level. This is actually a pretty well formed cup with handle base. We'll see if it can break out over that buy point. And you know, not seeing a whole ton of leadership in the software sector at this point, but HubSpot is making a case that it wants to move higher. We'll just have to see if the market's gonna let it run.
Yeah. And with earnings right around the corner, do you think that there's enough time to build a profit cushion with that early May report?
Yeah, definitely. In fact, I think we still have several days. So I don't have the specific earnings date, but it may be out in like the second week of November, something like that. But yeah, so I thought their earnings date was May 10th, May 14th, something like that. So there's a little time here to build a profit cushion here. But company's been reporting very good revenue growth in recent quarters, and wouldn't be
Mhm.
surprised to see another strong quarter.
Potentially May 5th, according to Market Smith, but we'll definitely check on that and see what kind of gain it can make heading into this quarterly
Yeah,
report.
actually, May
And then
21st. May 21st is their earnings date. So Market Smith is a
okay, well,
yeah. So there's some time
then
here. Yeah.
plenty of time there. Okay. And last but not least, we have Marriott on our list coming down to its 50-day line, testing that level and staying within this nice flat base here, Ken.
Yeah, definitely. We would actually call this sort of a base on top of a base, or a base on base pattern. You can see an initial breakout over the 140 level, and there you go. And then the stock just kind of paused. It didn't go on to an explosive gain, and what it did is just started moving sideways. So this is really just a good visual example of a base on base pattern, and trading pretty tightly near its 10-week moving average. It's been kind of moving sideways, so that has hurt the relative strength line a little bit, trending lower, but definitely look at Marriott as a stock. Obviously a reopen trade that is still hanging in there and making a case it wants to go higher. We need, for these stocks to really break out to new highs and work well. We need renewed signs of institutional buying in the indexes, and we're not seeing it yet. And we got distribution today, which is the opposite of what we want to see. But this one is still fighting a good fight, and it was up more than 1% today on a decidedly down session for the market.
That's right. And what do you think about the prospect of a lot of these economic reopening plays that have made, substantial moves since November? Should we just keep an eye on these upcoming earnings reports and see if that gives us some sort of feel for how the rest of the year may play out from a fundamental perspective and the stock action?
Yeah, I mean, so some of these reopen trades have really been just moving explosively higher. You got your John Deeres and your Caterpillars that have just made, such huge moves. Other stocks still look good. I mean, I think the hotel operators like Marriott. I mean, they're basing nicely here, and so you just definitely want to look at these reopen stocks. I mean, the airlines were looking good for a while, and then a lot of good earnings, decent earnings reports this morning. Airline stocks were not able to hold on to these gains, but a stock like Marriott still showing like it has potential for higher prices here.
And Ken, just a quick final word to investors on the action that we've seen this week. It's a continuation of what's been a bit of a tricky market for position traders buying breakouts.
Yeah, I mean, there was a pretty sharp wave of selling, like I said, between 1 and 2 o'clock Eastern this afternoon on the reported Biden capital gains tax increase, and it did result in some distribution. So we now have 3 on the S&P 500 since April 14th. So we're kind of monitoring that and monitoring the action in leading growth stocks. So I still think it's okay to, like we said yesterday, so okay to try some stocks on for size, but keep your position small to start, and still optimistic that we can head higher here.
All right, thank you, Ken, and thank you all for tuning in. We'll see you right back here tomorrow.